Hi class, today we're going to be looking at Chapter 6, Process Cost Accounting. So I'm going to share my screen with you. All right, you should be able to see exercise 6.1, and we're going to be working again with process cost accounting, which means that we are going to be either a manufacturing business or a service business that's producing units that are so much alike they're hard to distinguish one from another, or a service we're going to work on and finish it within an accounting period. So when we talk about process cost accounting, there's some things that you're going to need to know when you're trying to solve these problems. First of all, I want you to make sure that you read all the information that is in the problem carefully, because they tell you some information. We're going to be the Lamont Company, and we're going to be a manufacturing business this time. And we're going to be looking at, in this problem, the cost flows through the different processes or different departments that we would be using for a company. In this company, we're going to be producing machine parts for diesel engines. And the machine parts that we're producing are not custom order. That's when we would use the job order cost accounting system from the last chapter that we talked about. But these parts are going to be so similar, it's hard to distinguish one part from another. They're basically the same parts. We're using the same processes to make these parts. Something that's important about this particular problem I have in bold here. There is going to be no beginning or ending work in process inventories in any one of the departments. So we're starting out kind of slow and easy here. And in a process cost accounting system, what's different about it than the job order cost accounting system is that you will be keeping up with cost in each department. So each department is going to have its own separate work in process account that you're going to be working with. It will also have its own separate overhead account that you would be working with in each one of these departments. So what we know about this company is that we are going to be using process cost accounting, and that there were no beginning inventories and no ending inventories in any one of these departments. There are going to be 3 departments that we put the machine parts through before they emerge as finished goods. The first department is going to be the molding department, and the output from the molding department is going to be sent to the grinding department, where it's worked on further, and when it's finished in the grinding department, we're going to send it to the finishing department, and when we worked on it in the finishing department, we're going to send it to finished goods inventory. So each one of these departments have its own separate work in process accounts, and what they're asking you to calculate in this problem is what the costs are that are transferred out of each department. So what I've done is I've created a T account for you to show you that there are work in process accounts for each department. I made a T account for each department. And what we're going to see here is the flow of costs through each one of these departments. So work in process, as you know, is an asset account, and the problem told us there was no beginning inventory. So I just put in beginning inventories were 0 for each one of these departments. Then what you're going to do is you're going to receive in the materials into the molding department. So in other words, from the materials asset account, we're going to receive some materials into the molding department that we start to work on in the molding department process. The molding department has its own people who work on those materials, and that's going to be the direct labor. Each department has some applied or estimated factory overhead. And that estimated factory overhead would be calculated like we did in a previous chapter. In this case, they gave us the applied overhead in each one of these departments, and they gave us the materials that each department used and the direct labor that each department used. Starting with the molding department, I have recorded my direct materials, my direct labor, and my applied overhead. Because they told us there was no ending work in process, then that means that we transferred all of our cost to the next department sometime during this month. And because we had nothing left over at the end, I'm assuming this all came in at the end of the accounting period, at the end of the month of May, in other words. So you see here, I've added all of these together, these costs together, and my total costs are $40,000. I'm going to transfer these to the grinding department. So my $40,000 here goes into my grinding department. They have to receive the materials in from molding that they work on in the grinding department. Again, the beginning inventory for the grinding department was 0 because there was no beginning inventory, but we have received some from molding where we're ready to grind on it. And in the department, we also had some materials that we had to use for the grinding process, some labor, and some estimated factory overhead for the grinding department. And all of these costs came from right here. So I want you to notice that we transferred in $40,000 of cost where we're going to further work on these items in the grinding department. And when we're through with them in the grinding department, we're going to transfer them out and into the next department. So there's a process that we're going through, or there's a cost flow that I'm trying to show you as to what is going to happen. Because the problem told us that there was no ending inventory in your working process grinding department, all of these costs combined are going to be transferred to the finishing department. So you see here, this $68,000 was received in from the grinding department in the finishing department. There was no beginning inventory. We take what we have, the costs that we have accumulated from both the molding department and the grinding department together. What we received is the cost in the finishing department, and we're going to add some materials in the finishing department, some labor, and some applied overhead. We've got to process these items further. And so because there was no ending inventory, all of the costs are going to be transferred to finished goods. So we total up all these costs, and this is the cost that would be transferred to our finished goods account. And so the finished goods account is right here. So we take it out of the work in process and finishing and put it into the finished goods account. So they wanted you to calculate the cost transferred out of each department. The molding department costs were $40,000, the grinding department was $68,000, and the finishing department was $99,000. Then they wanted you to prepare the journal entries to record these transfers. So they wanted you just to record the transfers first in the journal. So in May, I wasn't sure about what date to put on there, but I did know it was for the month of May. So in the month of May, we transferred out of the molding by crediting molding and debiting the grinding account for work in process. So work in process is debited by $40,000 from the grinding department. And my work in process is credited for the molding department at $40,000. Now, when we got through with these costs in the grinding department, we're transferring those to the finishing department. So the work in process in the finishing department is debited for $68,000, and the work in process in the grinding department is credited for $68,000. And then what we're going to do is we're going to transfer from the work that we finished in the finishing department is going to go to finished goods inventory. So we're going to reduce the work in process finishing department. In other words, we're going to credit that, and we're going to debit the finished goods account. So our finished goods was debited for $99,000, and the work in process was credited for $99,000. And this is how we would record the journal entries that correspond to these transfers. In the second part of this problem, there was also another part that they wanted you to do. And this only affected the grinding department. So they wanted you to prepare the journal entry for the grinding department that reflects the cost added to transfer goods in the molding department. So in other words, they're wanting you to have a breakdown of what's happened in the grinding department. And if we look at the grinding department, you can see these are the things that happened in the grinding department. So the only thing they wanted you to do in this journal, and this is a little strange to me, I really think this should have came before this one, but, and they should have done it for each department, but they only did it for one. And they're just talking about the costs that were added. Do you see there? There's a keyword there that's added. It reflects the costs that are added to the transfer goods. And so all they wanted to know is what the materials, the labor, and overhead were. And you notice that the materials account would be credited. That's because it's an asset account and it will be reduced. The payroll account is for the amount of the direct labor. And that's what we would have in the payroll account. And the payroll account would have been reduced because these became a part of the cost of the department. The overhead account was reduced for the applied amount of the overhead. And if you look at this T account up above, you can see that all of these things ended up being debited to the work in process grinding department. So what we did is we took the total of the cost that we have incurred in this period in the work in process grinding department, 28,000. That was the total of the materials and the labor and the overhead that were added in this account here. So the work in process grinding department would have been added, would have increased it for 28,000 here. Now on this third part, there is a what if analysis. What if the grinding department had an ending work in process of 12,000? Calculate the cost that would have been transferred out. Again, they picked on the grinding department. So we're going to look at the grinding department. and we're going to enter all the information that we had earlier. And we still are receiving $40,000 in from the molding department. We still have materials that we are going to be using in this grinding department, the labor for the grinding department, and the applied factory overhead. The only difference is this time we have an ending balance. So they wanted you to determine how much was transferred out. And the way that you would do this is you would add your beginning balance plus what you received from molding, plus the materials, plus the direct labor, plus the applied factory overhead. And then you would subtract out the ending balance. And what's left is what you have transferred here. So you can see that I've got a formula up here that you should be able to see for this. You can see it right here. There was no beginning inventory, but you added what you received from molding, and you added your materials, your labor, and your overhead, and then we deducted the ending inventory here. And that would give us the cost that we would transfer to our finishing department. So the calculated cost that was transferred out. Then in that what if analysis, they wanted you to provide the journal entry that would reflect this transfer. So we're still transferring this amount to the finishing department. So we got to debit the work in process finishing department for $56,000 if we had an ending balance in our work in process account. The amount that was transferred out was $56,000, and that would go into the finishing department. The amount that's credited would be to the work in process grinding account. This $56,000 is going to come out of here. To credit it, we're reducing the work in process account. And then they took it even a step further. And they're asking you, what is the effect on finished goods calculated in requirement 1, assuming the other 2 departments have no work in process ending inventory? So they're still saying that this grinding department has an ending inventory associated with that. And they're wanting you to show how that would affect your finished goods. Well, what would happen is in the finishing department, which is the next department that we would transfer this $56,000 to, do you see that we received in from grinding $56,000 this time? The materials, labor, and the overhead were the same thing that they showed us from up above, right here in the finishing department. So when you combine all of these together, assuming that finishing department has no ending inventory, the amount that you would transfer out becomes $87,000. And that $87,000 would go in as a debit to our finished goods inventory. So it became $87,000. So they wanted to know what was the effect on finished goods. Well, the amount transferred to finished goods would be less. It's actually decreased by $12,000. In other words, from part 1, the work in process was $99,000 that you transferred out to finished goods. And this time it's $87,000. The difference between these is a $12,000 decrease in the amount that was transferred to our finished goods. So let's look at the next exercise. In this exercise, we're going to be a service business this time. We're not really manufacturing anything. And the whole point of this exercise is to let you know that some service businesses can use the process cost system. And that is, if they're performing services that are so similar, it would be hard to distinguish one service from another service. In this case, we're going to be a physical therapist who is performing electromechanical treatments for his patients. So evidently they do the same type of service all day long for their patients. During April, they had the following cost and output information. What they want you to find in this service business is how much it costs them per treatment. They want you to find the unit cost, assuming that there are no work in process inventories. And what that means is at the end of the period, they didn't have any patients that they were still treating. All the patients had been treated for that period of time using those electromechanical treatments. Now, it is possible that you could have some ending work in process or some beginning work in process for service types of business. But in this case, the physical therapist finished all their mechanical treatments for his patients. So there was no ending inventory or beginning inventory in this case. What they did have during the month was some materials costs that they had incurred of $750,000. The hygienist salary also cost them some money, and they had some overhead that they had incurred for this particular type of service business. They told you each one of these costs, and they also told you the number of treatments. So what they wanted you to do in this problem is to calculate the cost per treatment for April. So all we do is we take the materials cost and the salary cost, which is our labor, and our overhead cost, we add them together, and we're going to get total cost for this period of time of $10,000. If we had 100 treatments that we did, we would divide that $10,000 by 100 treatments, and that will give you a cost per treatment of $100. So they wanted you to calculate the cost per treatment for April. They also wanted you to calculate the cost of the services sold for April. And there's a formula that you need to learn to calculate the cost of services sold. The cost of services sold is equal to the cost per treatment that we just found here times the number of treatments. The number of treatments were 100. So if you take the cost per treatment and multiply it by the number of treatments, which was 100, that'll bring you back to the total cost of this department, which was $10,000. And then in part 3, it says, what if listing found a way to reduce overhead costs by 20%? How would this affect the profit per treatment? So what would be reduced is your overhead. And so what I did is I took the amount of the overhead before, which was 5,000, and I multiplied it by 80%, because if we reduced it by 20%, the cost of that overhead would be equal to 80% of what it was previously. So 4,000 times 5,000 times 80% will give you 4,000. That's the cost of the overhead if they could reduce the overhead cost by 20%. When you combine all of your costs together here, the 750, 4,250, and the 4,000 together, the total cost of the treatments are now 9,000. If you divide that by 100 treatments that they told you that they had up here, that gives you a cost per treatment of $90. So in other words, it was $100, but if we could reduce our overhead cost, the cost of our treatments would go down by $10. And that decrease in cost will increase our profit by $10. So they really wanted to know, how would this affect the profit per treatment? The cost went down by $10, which would mean that your profit would go up by $10. Let's look at exercise 6.3. On exercise 6.3, they want us to calculate the physical flow and equivalent units. The equivalent units are the units that could have been produced during a period of time. Notice that in this problem, this problem has some ending work in process. They like to abbreviate that as ending WIP. So if you see EWIP, they're talking about ending work in process. I've got it underlined here because there's no beginning inventory, but there is ending inventory that we have to take into account. So if we have some ending work in process left over, we know that some of that ending work in process has not been finished. If it had been, we would have transferred it all and there would be no ending work in process account. So it's important that you realize that in this problem, there's no beginning inventory, but there is an ending inventory that you're going to be working with. And so we're going to be a local CPA firm, and they're processing individual, tax returns that they're processing for the month of March. And notice they've got here as a hint, the output is measured in the number of returns. So even though this could have been set up as a service business, they're basing their cost based on the number of returns that they are preparing. So they've given you this information. They've given you units that were in the beginning work in process, which is 0. Remember, there's no beginning inventory. They gave you that they had started 6,000 units during this period of time, but they completed only 5,000. So that's where we've got the remainder here of 1,000 that was not complete, was left in the ending inventory. Notice here they tell you the part that was finished in the ending inventory, which is 50% of these. And what that means is that 50% was complete with respect to all the cost. So the remaining 50% was not complete with respect to our conversion cost. And so we're going to be talking about that a little bit more later on as we go through this chapter. The main thing here is you had 1,000 units in ending inventory that were not fully completed. 50% of those were not fully complete with respect to all of the cost. And then they gave you the total production cost. And what they wanted you to do in this case is to prepare a physical flow schedule. So when we're talking about the physical flow, we're going to start with our units only. And we're going to talk about the units that we have to account for in this business. We have to account for beginning inventory units. But in this problem, there were no beginning inventory units. So the beginning inventory units is 0. The beginning inventory units plus the units that we started during this period of time are going to give us the total units that we have to account for. The units that we started was given up above at 6,000. So beginning inventory plus your units started give you the total units to account for. Notice I have a double rule underneath this total. We're going to reconcile this total in the next part of this physical flow schedule, which wants a breakdown further of these whole units. The units accounted for have to consist of calculating the units that are completed during this period of time. So from the beginning work in process, we had no units, but we know that we started and completed 5,000 units because they told us that in the above information. They told us that we had some units completed of 5,000. If we did not know what that 5,000 was, we could still work backwards in finding this amount. But they gave it to us in this case at 5,000. That was your units that were completed. Excuse me, class. Units started and completed then during this period of time was 5,000. That's what they told us. The beginning inventory plus what we started and completed will tell you how many units that you're transferring out of this department. So because we didn't have any beginning inventory, but we did have some units that we started and finished during this period, the total amount that we are transferring out is 5,000. The units transferred sometimes are also called units completed. So this 5,000 happens to be units transferred. The units transferred are all the units that we finish in the work in process account. The units started and completed could have had some beginning inventory units in there, but in this case they weren't. So if we needed to work backwards to determine the units that were started and completed, we would take the difference between the units that we transferred out and the beginning inventory, and that will give you the units started and completed. So I think I want to add that to this here so you'll know how to calculate this in the future if they don't give it to you. The unit started and completed is determined by subtracting the units, the beginning inventory, subtracting the beginning inventory units from the transferred units. So I'm going to add that to that so you'll know how we got that. And I'll move this over just a little bit so you can see the whole thing. All right, so this is how you could have got that. By subtracting the beginning inventory, which was 0, from what we transferred, it will give you the started and completed units. Now, they told us that we had some ending inventory and that ending inventory was 1,000 units. That was a given amount here. So if you add what you transferred plus your ending inventory, it'll give you the total units to account for, or the total units accounted for. Notice this equals this amount right here. It's a reconciliation of this. This is just a further breakdown of what's happened up here. So sometimes you might have to work backwards at things. So if you know the total units to account for, you could have just plugged that in down at the bottom here. And if you knew what your ending inventory units were, this minus this would give you what you transferred. And what you transferred minus your beginning inventory will give you what started and completed. So sometimes they're going to give you certain items and sometimes they're not. Just fill in what you do know and work backwards at it. Now the next part of this wants you to prepare an equivalent unit schedule. So in other words, this physical flow schedule was about whole units. These are your whole units that we were working with here. The equivalent units are the units that could have been produced during that period of time. Remember that we had some ending inventory that was 50% complete. So we didn't finish our ending inventory. So our equivalent units really tells us what we finished during this period of time. We had some units that were transferred. These are the completed units that went out of work in process, and that amount comes from right here, 5,000, where the units transferred. And at the top, I believe they told you that they were completed, but these are the ones that were transferred out. I wish they'd used the term transferred and not completed there, but unfortunately they didn't. So there are 5,000 units that were completed, but we did use the word transferred here. So you can see that's the same thing there too. So your units transferred are 5,000. Those are finished units. You're transferring those on into the next department. The ending inventory units were 80% complete. Oh, I'm sorry, I jumped down. That's a what if. So let me get back up here. This is where we should have been. Our ending inventory units were 50% complete that they told us here. So 50% of 1,000 is my equivalent units of ending inventory. That's this figure right here. If I add what I transferred out plus my ending inventory units, my total equivalent units, or the total units that could have been finished or were finished during that period of time, is 5,500 units. Now in part 3 is a what if analysis of the same thing that we've done before. The only thing they're changing is the ending work in process is now going to be 80% complete rather than 50% complete. So your whole units would be the same as they were up top. That wouldn't change anything at all. Your whole units do not change. But your equivalent units would change if they were 80% complete this period. We would take those 1,000 units, whole units in ending inventory, and multiply that by 80%. And that would give us 800 units that were equivalent units. And then when you combine the 5,000 and the 800 together, it gives you 5,800 units. So the equivalent unit schedule shows ending inventory is going to increase by 300 units because they're 80% complete rather than 50% complete. And this would increase the output from 5,500, which is what it was before, to what it is now. And so we're going to do one more problem, and then we're going to be finished with this for today. And in this problem, what they're going to have us doing is preparing a production report. A production report is nothing more than a report that's describing the working process for the department. Each department would have its own separate production report. And so it's going to describe the units that we're producing in this production report and the cost of those units. It's going to give us a breakdown of those units and the cost of the units. The Tomar Company produces vitamin energy drinks. The mixing department is the first process department, and they're going to mix ingredients required for the drinks. The following data are for April. Notice in this company, they have no beginning inventory, but they do have some ending work in process inventory. So again, in all the problems that we've worked today, we've had no beginning inventory, but in two of the problems, we had some ending inventory that we were working with. So there's no beginning inventory. The quarts that were started during this process are 90,000. Those were the units we started. This is what we transferred out, was 75,000. So what we had left over is the difference between these. This is what we had in work in process. And these are the costs that we incurred in this department. Remember, the production report is only for one department. We're going to be the mixing department that we're preparing this production report for. In the production report, the top part is broken down into unit information. We're going to start with our units to account for. And those units would start with our beginning inventory. Since we had no beginning inventory in this problem, the number of units would be 0 in beginning inventory. We're going to show what we started during this period, which is 90,000 units. Since there was no beginning inventory, what we started is the total units that we have to account for. The beginning inventory would be added to the units started to get the total units to account for. The units accounted for are broken down into what they call physical flow. These are the whole units in this column right here. The physical flow is the whole units. The equivalent units are the units that could have been produced during this period of time. So we are starting with, in this case, what we transferred out. And what we transferred out just happened to be given to you. The transferred out amount was 75,000. The ending work in process was 15,000. That too was given to you. So the transferred out units plus the ending inventory would give you the total units that you have to account for. Notice that reconciles back up to this 90,000 units that we did here. These are whole units that we're talking about here. But my equivalent units, those are the units that we could have completed during this period of time, is going to be different. And that's because we finished 75,000. We transferred them out, so we have all the materials, the labor and the overhead, is in here. But the ending work in process was not fully finished. The ending work in process in this company is 60% complete with respect to direct labor and overhead. So 60% of 15,000 is 9,000 units. So to get 9,000 units, I took 15,000, which was your whole units of ending inventory, and I multiplied it by the percent that was complete during this period of time, which is 60%. So 9,000 are my equivalent units of my ending inventory. When I add that back to my 75,000 units that I did finish, my equivalent units, or the work that I actually completed during this period of time, is 84,000. My equivalent units are 84,000 units. Once you've calculated your unit amounts, then you're ready to apply cost to those units. We're going to start with all of the costs that we had to account for, and that's starting with beginning inventory cost. Since there were no beginning inventory units, there's no beginning inventory cost. The total cost that we incurred during this period of time was $588,000. I got that by adding my materials, my labor, and my overhead all together. Combine them together to get the total cost of the items that you are producing during this period of time. Since there was no beginning inventory, all the cost we incurred during this period amounts to $588,000. So we add the beginning inventory cost plus the cost that we incurred this period to get our total cost that we have to account for. The next step in this cost of production report is to determine the cost per equivalent unit. And to do that, we'll put it in this formula here. The total cost to account for that we found right here, 588,000, is going to be divided by the total equivalent units. The total equivalent units is what we found here at 84,000. So if I divide 84,000 into 588,000, it gives me a cost per equivalent unit of $7. I've got to have a breakdown of these costs. Notice this was double ruled. So this down here is going to have to match up to this. So I'm going to break our costs down further. What I know is what I've completed and transferred out. The completed and transferred out cost is something that I have to determine. And I would do that by taking my completed and transferred out equivalent units of 75,000 and multiplying that by the cost per equivalent unit. So my 75,000 units that were the equivalent units for what was completed and transferred out. Finished units, in other words, that we're sending on to the next process is 75,000 units. I've got to assign a cost to those 75,000 units. 75,000 times 7 is the cost of the completed and transferred out units. My ending work in process cost that I have accumulated so far is based on the ending inventory equivalent units. I'm going to take 9,000 and multiply it by $7, and that will give me $63,000. The total cost that I've accounted for now is my cost of the units that I've transferred out plus my ending inventory equivalent units cost. The total cost to account for this month is $588,000. Notice we've reconciled that back to this previous cost. And so that's all I'm going to talk to you about today. I think I've given you enough information. So I'm going to stop sharing this. And we'll see you again next time. Bye-bye.